All right, all right, all right. Good morning. Let's get the buck out of here. All right. Good morning, everybody. Como talebo? How are you? I missed you. Back from Cuba. Amazing trip. Coffee's good. So, hey, welcome. It is 6:33 on Wall Street. It's time to get our global macro on. Welcome to QB Live, where we uncover the best global macroeconomic opportunities by looking at sentiment, inflation, employment, GDP, technical trends, open trade positioning. It's a fancy way of saying looking at the commitment of traders report, seasonality, market sentiment. Amazing stuff. My name is Wayne McDonald. I'm the founder of QuantBox. I am also yes, I am the founder, but I'm also a Harvard educated economist and I'm a professional trader. I love trading forex and futures. And I've always had, a, how you say, a style. That's not right. A desire, I suppose, to understand why the markets are moving. And that's where fundamentals come in. It gives you long term trends. One of the things I said back in January was this particular week, out of all the 52 weeks in the year, this is when I believe a rally into risk on assets could possibly start. And yesterday was a big risk on day. So amazing coincidence. We'll see what'll happen. But I get all of that from seasonality. Okay. And as you can see here, seasonality shows August to September for the S&P 500 can turn bullish. So anyways, that's why we have all this stuff. It's knowledge. And so we'll probably see institutional positions in the market start changing again. Very cool. So, anyways, if you're watching this on YouTube, you're watching it many hours delayed. Why don't you swing by quantbox.co, try a trial? It's $8 for a week. Not only do you get access to QuantBox, but there's also, let me pull it up here. On your dashboard, there's a microeconomics training course. There's also a statistical analysis training course, as well as giving you access to the live sessions and giving you access to the database. Oh la la. With that being said, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money, cannot afford to lose. Let's get on with it. Log it into the Google Cloud. All right. Before I jump in to the scatter plot, I want to take a look at the risk gauges. Still very risk off. So this is going to be our trick. The statistics of looking at what's happening right this second still show bearishness. And of course, they don't lie. That's what the numbers show. But as I had mentioned in the open, is that back in January, which is what, 8 months ago, 9 months ago, we had this particular week out of the year as being ready for a rally. But it's kind of like, I don't know, going on a whale watching boat tour. Where in the where in the world are the whales? I don't know. They're usually here, right? So you don't quite know exactly when risk on shows up. Okay. Um, but it could. When I say it could, it comes from looking at seasonality. Okay. So, yeah. So anyway, so it's still risk off monthly, weekly, and neutral daily. Go to the scatter plot, see what's moving right now. And everything in the top left hand corner has been going down. Why? Because those are the things that go down in a risk off mode. But we're sitting here thinking, or possibly, that even though everything has been risk off, this particular week, the third week of August, could just suddenly out of the blue be risk on. And everything that should be down is up, or many of the things that should have been down, should be down, are now up. And that's bullish unexpected. But remember, this is looking at scores and it's looking at what's actually happening right now. Long term scores, short term action, and they only, seasonality only gets one small blip in the calculation. But if you just looked at that one blip, you would say, maybe I want to buy these types of things. Who knows? We'll see. So, an amazing coincidence. Okay. Japanese stock market way up. Typically, the yen pairs go up. NASDAQ is up. Well, we have NVIDIA reporting this week. Remember what happened last time NVIDIA reported? It was all doom and gloom, end of the world, definitely going to hit recession. Then boom, nope, recession, recession averted, everybody, right? And NVIDIA turned the market. We also have Jackson Hole this weekend, and Jay Powell, I suppose, is going to do a speech on Friday. Is it Friday or Saturday that they do those things? So, anyways, we'll hear from Jay Powell, but I think Nvidia is going to be the thing that moves the market. I don't think Jay Powell is going to say, anything. He might say something new and something different, but it won't impact whether. I mean, he's not going to tell you they're one and done. That's all we care about, right? I suppose the other thing we care about is if it is one and done, um, how long is the Fed going to hold interest rates? Well, he doesn't know. So how could he answer that question? What I talked about several months ago is in the upcoming September Fed meeting, I believe they won't hike, and they'll hike at the one after. That gives the Fed a lot of time. But what's really important about the Fed meeting, and remember, you're getting all kinds of mixed messages and from the news and media outlets about what's going to happen. Is the Fed going to raise? No, no. Are they done? No. How do I know those things? Well, they kind of have told us. Um, but what is important about the upcoming Fed meeting, which is still weeks off, uh, um, is that we're going to get a summary of economic projections. Everything else doesn't matter. Okay, unless they do raise, but they're not. So, anyways, plot shows that the tide might be turning. Again, everything up here and everything down there means the market is shifting from what has been to maybe something new, or maybe it's just noise. Well, it just happened to be on the perfect week. You can see since June 20th, the stock markets around the world have peaked. Okay, so everybody's had their little pullback. So the question for us as investors this week is, are we buying the dips or is it too early? If you don't know if you're buying the dips, then you don't have a bias and you're in serious trouble. Cool. Mm, 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 mm. I guess we can just look at this one. Let me pull up this one. Maybe take a look at this chart. It's available to you under the news section, and I'll take some time and reorganize all this for us. But somewhere near this period, euro dollar seems to go up. Near this period, pound dollar tends to go up. Near this period, USD yen tends to go up. Near this period, and I'm talking this time between August, September, Aussie dollar tends to go up. In this period, Kiwi dollar tends to go up. Okay. And in this period, USD CAD goes down. It's right as rain. So we don't know if that accurately predicts the future, but it does accurately predict the past. And that did happen on average. But 20 years worth of data and 5 years worth of data. So anyway, so that's what has me going this week. Got to keep my eyes on that prize, see if there's going to be a turn from risk off to risk on. Okay, CAD Swissy, Pound Swissy, USD Swissy, Kiwi Swissy, Aussie Swissy, Euro Swissy. Wow. Retail is heavily long all those. That's interesting. Now, institutional investors are still heavily they're heavily bullish on oil, euro, gold. Okay, gold will be interesting if inflation goes back above GDP. Atlanta Fed expecting a very big GDP, so maybe gold is a bit early. But if we do get risk on this week, next week, the week after, if this becomes a bullish fourth quarter, typically it'll mean on aggregate demand would go up. So gold prices would go up, but so would pork belly futures, and probably the cost of your football television subscription. Markets still heavily short the Japanese yen. And I think the other thing to start watching over the next couple of weeks is the yield on the 10-year. It's extraordinary right now. And it shows that there's not enough money in the market. Oh, too bad it failed on us. All right, I'll have to send that. It failed on us. The bond market has failed, meaning there's either too many bonds issued by both the Fed and the Treasury. Let me explain that. The Fed is selling new treasuries, right? Or no, no, let me back up. The Treasury is selling new treasuries. The Fed is selling old treasuries. Nonetheless, there are a lot of treasuries that pushes the price down and the yield up. So it could just be oversupply of treasuries. But also, there might be a lot of money sitting on the sidelines because nobody trades this time of year. Remember, I prepped you for that. And so the thing is, when the money comes back to the market, okay, we would probably see this yield go from 4.3, right, which I think is a 16-year high, down to something more normal. Now, looking at seasonality, that doesn't typically happen to like almost till October. This could be really newsworthy for a while. So the big question on Wall Street, if we're at a 16-year high, which we are, 16-year high, when's the top? Now? Is it going to like double top type thing? Or is this going to go up, hit 5% and then drop? We'll find out. This would suggest this is not a double top, and the bond market will continue to fall until October. Wow. Okay. That could be amazing. I mean, really. Remember when that happens, all those banks, remember the regional banks had all those 10-year T notes locked in at 1% or less. What this means, if we're going from 4 1/3 to 5, that's just more money lost in the banking system. Those regional banks become more and more vulnerable. Okay. Oil kind of tops off in the next 30 days and then comes down for a bit. So it's only slightly risk on, but neutral, right? But you see like score of one, but nothing really going on. Just quickly look at the economic news. Like I said, Nvidia as their thing. Let's just do high only. Look on the economic front. Jackson Hole is a big deal. Existing home sales. When is that coming out? In 3 hours? Okay, that's a doozy because I mean, I think what's more interesting, not how many are sold, but how many are for sale. And I don't think there are any existing homes for sale. I think most of the homes that are for sale are new. Okay. I mean, look, if you're going to pay 9% for a mortgage, you want some nasty old house down the street. Or do you want a brand new one, huh? Retail sales out of New Zealand. Yeah, 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 yeah. What else going here? Cat auto sales. Yeah, 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 yeah. PMI. Okay, manufacturing PMI. Oh, right. I would call it that high, but yeah, we'll look at the trend when that comes out. New home sales. That's the one we kind of want to. We'll get sort of a better look. But here's the thing: it's just not a good time to buy or sell a house. And if you thought the Fed, remember, this is just game theory. If you thought the Fed was going to cut this next year, why would you buy a house this year? You wouldn't, unless you have to. And then, yeah, going out Jackson Hole is the big thing. And what else going on? Do I care about Michigan consumer sentiment? No, but they have inflation expectations in there, but whatever. That's way overblown. More Jackson Hole, more Jackson's Hole retail sales out of Australia, but I think already all of that is just overridden by, is China going to stimulate or is China not going to stimulate? Okay. Negative numbers tend to be bad for sales. You imagine if you're running sales for a company and the CEO comes up to you. So how are sales going? Negative? Oh, yeah. Vulnerable. Right. Please don't ask me more questions. I'm feeling vulnerable right now. Yeah, I used to run a sales department. How often do you think the CEO of the company wants to know how sales are going? Like 9 times a day. Don't talk, just listen. Okay. Let's look at the charts. See, I got used to Cuban coffee. All right. All right. Yeah, I looked at this a bit. Let me get my drawing tool. And we're through that target. Yeah, 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 yeah. See, here's the issue. If we are going to go risk on, then this is going to have to do like a flip, huh? Um, I almost like that it went to M0. I kind of almost like that. So, um, you see what I just drew on this chart? Based on the chart, that would be 100% wrong. But you should be a be you know, be prepared for the small chance it happens because we are using seasonality. It's an edge that you have because you're a subscriber to QuantBox that most people don't have. So if that happens, a lot of people are going to be surprised, and you're going to make money if you trade it. If it happens, if it happens and you trade it, you'll make money because it'll go up because you're hitting stops. It won't be necessarily going up because people are buying. What this chart tells you is this. So you have to sprinkle the pixie dust on it and say if seasonality is going to show up and this turns risk on, it'll make one of those weird moves where it makes a lower low and then goes back to the range and then makes a higher low and higher high. And you're like, what? Uptrends are not supposed to start with a lower low. Well, yeah, but you're also not supposed to start an uptrend with the weakest currency on the planet either. Okay, the Aussie's a dog with fleas, but if it goes up, everything else is going up. What we know is euro should be going up, and it's already. Let's do this. Okay, already kind of testing that range. So, Aussie's much um, different. You can see that what what seems to be happening is a move like this. If it goes risk on, then well, again, yesterday was a big green day. This is opening with some red. If the red stops, because actually, if you're looking at this chart close enough, you'll notice that we're in the daily bullish buy zone. So boy, it'd be interesting if this red candle, which is essentially tested the 21 EMA, if it does one of these things today, test that 21 again, like let's say the rest of the week looks like that. That's seasonality right on time. Right? And at some point, we'd want to be on the clue train. Looking at the 4H, okay? Again, if you were trying to get some seasonality going, you would play this as a higher high slightly, right? So your new trend, so to speak, would be like this: higher high, higher low. Okay. And you're like, Wayne, I don't see that daily. Wayne, I don't see the daily pivot points. Okay, so you got to turn this bullish. So you go to your indicators, you go to your biased pivot points, you put it in bullish mode because maybe last week you were bearish, but this week you're seasonally bullish. And I should be clear, if this is the first video you've ever watched of me, what I say is this is a window from the third week of August to the third week of September. Things very, very often go from bearish to bullish. And so that's what I'm trying to put together for my own portfolios and trading strategies. That is this the first week that it turns bullish, or is this just noise? Okay. All I know is with 20 years of data, if I'm still a bear, and I should be, it's risk off. And if I'm still a bear, and I should be, because technically it is, I should still be aware that there's a bear trap. I have to sniff it. It's a bear trap, and I'm a bear. Okay. If I don't make the right decisions, all my you know the bear can get hurt, I suppose. I don't know. I'm struggling for the analogy. I'm thinking like, is there a beehive in the middle of this bear trap? Right? Like, who put the beehive there? Right? You can just see the clever farmer with bee stings all over his face, and he's like, maybe I didn't think this strategy through. But anyways, Um, so I ain't predicting nothing, right? Is that Easy E? Am I going to quote Easy E this morning? Don't quote me. I ain't say she. All right. Piggy. I'm not very excited about Piggy either. Hello, Kirby. Yeah. But higher high, right? Like when right now, like I showed you on many of these higher time frame charts, like the daily, it hasn't happened, nor does it look like it's going to happen, right? Remember what Michael Jackson's mother said, right? Some point the lies become the truth. So we got to watch these technicals. The technicals are not what makes the market. The technicals just describe what the market has done. So, anyways, going into this window period, third week of August to third week of September, in particular, this is now the first day of this period was a big up day. So, like, if you were a bull, this right now, the price we're at, 127 and a half, let's say, is where you're supposed to get ready for the day if you happen to be a bull. And I think a lot of people are not bulls yet, but I think a lot of people want to be a bull. That's why we're in this period, this window period, where at first, if you're an early bull, you're taking out all the bearish stops. And then that makes the rest of the market, which want to be bulls, bullish because now they have some confidence. They couldn't predict it, but now they see it. Right. So you don't have to be the first one in the game, but I just really, really, again, in January, I explained the importance of this week. So, again, I don't know if it's this week, but this is the week that you're supposed to be ready, willing, and able to recognize a reversal if a reversal happens. And on this time frame, which is just on this pig dog, but most of you really like the 4 hour. I know I do. Okay. And we kicked off the weekly central, which gives us a target of R2, which is an aggressive target. Okay. And on the 4 hour, this chart is actually technically bullish. And most people are going to miss this. They're going to keep selling it because that's what's worked recently. And they're not going to see this as a giant double bottom. And they're not going to see this as the seasonal opener of the rest of the year, the seasonal opener to the bullish market. Again, I don't know, but that's, you know, interesting. By the way, I love saying interesting because back in the 90s, people would say the internet. I'm like, it's not the internet, it's the internet. Interesting. All right. So, anyways, quite an amazing coincidence. Okay. Here's what was the plan. We actually got pretty close. Okay. That's the 4H now. Okay. So let's say this turns bullish. Why? Seasonality. I got to turn this bullish. It's in bearish mode. So let's say this week I changed my mind. It can fall for 2 weeks. It doesn't matter. I'm just kind of waiting for a reversal. Let's say my plan, my strategy is to be ready for a reversal. Well, what would that look like? Well, you'd buy it in this green zone. Oh, snap. Okay. Then what? You're going to breach the 21 for the first time in a month. And then it's going to make a higher low, higher high, isn't it? Well, we don't know if it will, but that's what would happen if it does. So this is why, like, it's a little tricky because it's not true scientific methodology, right? You're looking for what you're looking for, and you're gonna find it come hell or high water. Well, that's the challenge, but uh, you could consider that a double bottom if you were thinking this week. Remember, in January, I said this week would be a bullish week, or you'd look to be a bull, and we already predicted this downward move. Okay, so we got that right. Okay, so now what? Is it the news about the ARM IPO? Is it news about Nvidia crushing it? By the way, that ARM deal, I don't know if you guys are following the IPO market and ARM, which is a chip maker, and they're valuing it at like 70 billion, which nobody asked me, but if they did, I'm like, that's a little too pricey. And I think the part that they're selling is the CPU part of the ARM. Wow. Can you imagine that the entire financial industry starts buying shares of ARM listed in the United States because and they want anything AI, anything chip making. Then you find out they make CPUs and nobody cares about CPUs anymore. You care about GPUs. And you're like, wait, that's not what I'm buying? And you would think a professional investor would know such simple things, especially if they got like a billion ready to go. We got to get some of this ARM. If you right, if you want to be in chips, you got to be in ARM. And you're like, do you actually know what you're buying? Don't be shocked if they have no idea what they're buying and they buy a bunch of CPUs. If you're interested in artificial intelligence and the cloud, they don't use CPUs. This is probably why SoftBank is selling it to a bunch of suckers in America. Let's sell some crapola, right? And so if I'm wrong on that, let me know. But I thought I overheard that somewhere, and I'm like, really? It's their CPU unit? I got a Model T. If you want to buy my Model T, it's like a Tesla. You're like, wait, I thought I was buying your Tesla. Like, no, you just bought my Model T for it. Anyways, um, all right. So, anyways, up the target here for what are we looking at? Again, this is another dog with fleas. New Zealand has just been terrible. So if this turns bullish, I mean, oh my god. Okay. So target is back above 60. We had flipped the other way on kitty cat. This would go bearish. So let me change my bias. Go to my list. Buy. Oops, wrong one. Biased pivots. And if I'm risk on, then this pair would fall. And my target would be sell at this price, which kind of looks like it just could be a top. I don't know. We might be seeing patterns that we're looking for, right? Confirmation bias. But again, if I told you in January this was going to happen, I mean, don't you even want to try? Like, right? Like, you're like, dude, that was 38 weeks ago. I'm like, uh huh. Okay. Impossible, right? Implausible that somebody could say something like that and then have it happen. All right. Huh? Makes me think of the crowd in Monty Python where they're like, a witch, a witch. Build a bridge out of him. Okay. Anyways, you got to watch it. Quest for the Holy Grail. So, this is just a day trade. That would get us a lower low. So then you would plan for a lower high tomorrow with a lower low then, right? So the next couple of days would look at that. So we're talking about we're kicking off a top here at it was 136. We'll call it 135 and a half, let's say. It was 135.50. Okay. And I prepared you all last week for this. Okay. And all of a sudden, where are we going to be in a couple of days? 134. It'll be very interesting if we do that. I don't know if it will, but you have, I'm pretty sure, real time charts in front of you. And if your alpha would be to know that this happened as it's happening, where everyone else might take 3 or 4 weeks to get on the clue train. So the best of the best that don't have this as part of their strategy will sit on the sidelines and do nothing for 3 weeks. They're not earning money, but they're not losing money. And they're smart enough to see a change. The worst of the worst is if this happens and something like USD CAD falls after having risen for so long. Guess what? All these bulls, first of all, they probably didn't know it was turning bullish, so they would have lost money. We had this risk off happening at the beginning of July. Well, I'm sorry, it didn't happen until the middle of July. So a lot of people would have been buying or selling, 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 selling. And then it goes up. So now they're buyers because somebody's got to buy it on the way down because the smart money's selling again. So this could be us selling, selling, selling. And a lot of the market participants will still be buying because they're still got the wrong narrative, which means they don't have any alpha. They don't have any research. They're just following along, but generally doing the opposite. So so once again, I don't want to be, let's say, arrogant about a possible strategy. But if you were thinking this is a reasonable probability, because that's all we're doing here, reasonable probability, um, that a reversal pattern occurs soon. If you see a reversal pattern, do you take it? Denise says, "Do you wait?" You can. That's just technique. And what I do, let's say 10 of us all think the same thing. We'll probably have different entry prices because one will be more aggressive, one will be right, that kind of stuff. So in that way, the 4 hour 21, like I could just say, well, I already see this as a head and shoulders pattern. So maybe I do a 21.55 on a 1 hour. And you wait for the 4 hour. What's the difference? Not much, really. You know, one's more conservative than the other. Um, or if it did this, then oh my God, would you take that? Right. So maybe there's no moving average used at all. But so this chart doesn't have moving averages. But if it did something like that, and I'm trading price action, right? Let's try to get this right. You're trade and you would probably sell here because you're 21.55 crossed. And I might sell at the same price, but I don't even have moving averages, right? So your choice really, Denise, is are you going to sell the top or the roll reversal? Because as a bear, you can sell the top or lower highs. That's it. There is no other choice, right? So so which one is right? Yeah. And on what time frame? Mhm. Yeah. That's a big question. So you have to figure that out. But, everyone else, let's say, I mean, these like if we were debating, do you trade the top or the lower high? And then we carry out the debate. What's better, the 15-minute chart, the 1 hour, the 2 hour, the 4 hour, the daily? But everybody else is just going to keep buying as it falls. And so we're arguing, how the risk reward, meaning like The ones selling at the top are taking the most risk, but they're going to be rewarded with a little more money. And those that are a little more conservative, well, they're going to give up some money, but they're giving up some risk. But you would say if you get this right, you're probably going to be fairly compensated because we're just changing the risk and giving up some reward. But that's what we do all day, every day. For everybody else, they just don't see this coming and we run them over like a freight train. So, the beginning of this move, if it does turn bearish, what we're doing is we're hitting all these stops. So, again, like the smart money got out of the shorts here and then it broke out to the long because, well, the smarter money started buying. And where was the let's say uninformed stop losses of people still selling? These are all stops being hit, right? And so now what are they doing? They stopped selling and now they're all buying. So, we haven't moved for a couple, some time. So where are the stops? If you traded here, the stops are going to be here, right? The vast majority of, let's say, um, by lack of definition, let's say dumb money, they don't see 20 years of research. They're just doing what happened worked last week. So if they were long, where are the stops? The stops are all kind of down here, probably all the way into this area here, right? So what would probably happen, I think, over the next couple of weeks, if this does turn from risk off to risk on, what'll probably happen is we'll take it all the way down, we'll hit this, it'll come all the way back up, and then we'll bring it all the way down. Okay. And remember the best case scenario I gave in January, and this is to all the YouTubers that are not even subscribers, right? In January, not only did I say that this had a high probability of happening this particular week, like yesterday and today, very, very specifically, my target isn't even a price. So it's not like, okay, if it falls from 135, maybe we can take it down to 130. No, no, no. No, this would last for weeks and 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 weeks. I have a time-based target. I might want to take this down to 120, not 130. And that would just blow somebody's mind away, just blown away. Well, I have 20 years of research, so seems basic to me. But if you don't know, you don't know. So I don't know the future, but I know what I'm trying to control because I can't control whether this works or not. I'm not the market, but I can try to control my behavior and my expectations. My behavior is if I observe a reversal, I should believe it and try to trade it. And what are my expectations? Well, with 20 years of research, this could last till December. So do I sell this and go for 35 pips? No. I have a bigger view of the market than the next 12 hours or 6 hours or something. Yeah, I might be short this 16 weeks. 16 weeks? Yeah, well, I told you that 38 weeks ago. So I might actually believe my own nonsense. But the thing is, you start with a thesis, and now I need to use technical analysis to confirm or deny my hypotheses. Okay. I need to look at this through the lens of scientific methodology so that I don't make stupid mistakes. I don't want to gamble. I don't want to bet. I want to control my behavior as much as possible because I cannot control the market. If I'm random and the market's random, how the heck am I going to get a consistent result? Okay, cool. So, anyways, there's one currency pair. There are many out there like it, but this one is mine, right? No, yeah. But anyways, so I'll let you to it. So thank you for being a subscriber of QuantBox. If you're on YouTube, kick down, come clean. Don't be a holdout machine. Pay the $8. Try take the trial and be amazed. And if you don't like it, cancel. Because if you look at all this data and you're like, all this data is nonsense, I can't help you. So cool. take the trial. And if you look at it and go, oh my God, I don't know what half of this means, but it's amazing. And I got your back, dog. There's lots of resources. And of course, I do these events every day. I can help. So, peace on earth. May the pips be with you. May your profits be above average. Again, good to see you. It's nice to be back from Cuba. Yeah, what an amazing experience. Just literally, I mean, honestly, I couldn't even believe that there's been another 100% inflation since I was there. And by the way, I've been saying that I was there in January, like six. No, no, no. I was there in March. March. And there's been 100% increase in inflation since March. Like, oh my God. What interesting. I don't have the time to share all the stories. Plus you have to buy me a cocktail. Anyways, but I was there and I did meet some interesting people and did some interesting things. And eye opener. Yeah, eye opener. Cool. And I took a buddy of mine who in the 90s moved from the United States to Eastern Europe after the wall had collapsed and they were transitioning from socialism to capitalism. Like, so I planned it well. So, anyways, he's looking around, he's like, oh my God, all of this is going to change. I'm like, well, that's what they've been saying for 30 years, right? But nonetheless, the what an amazing experience as an economist. So, anyways, I'll share stories with you some other time in some other place. Peace on earth. May the pips be with you. May your profits be above average. Have a great trading week. Cheers.